Well, hello everybody. My name is Luke Robinson and I'm a business advisor here at Collective. And Collective is your all-in-one back office solution for your business. And essentially you can think of us as all-in-one shops, all-in-one services for S corps. Essentially we'd handle the whole shebang. The first thing we do is set up the business, set up an LLC, make an S corp election, and then handle your payroll, bookkeeping, and tax filing at the end of the year. But today, we are actually conducting a session we like to call Tax Tuesday. And essentially, what it is, it's a tax AMA. It's an AMA surrounding, best business practices, best financial business practices, accounting practices, tax, whatever questions that you have that are kind of in that arena, feel free to ask. And also, just to kind of get the legal stuff out of the way, of course, think of this as be quiet. There's a cat outside my door, and my dog is freaking out. So apologies about that. But essentially, don't think of this as legal advice, tax advice, anything like that. This is just information. So, before you do anything, official based on this, it's always a good idea to speak, to a CPA, a tax attorney, before you do anything official. But now that we've got that out of the way, I believe we have some questions. Is there a way we can just pay Collective to just get a company backdated to an S corp from an LLC? So no. So Collective, we're subscription based, and essentially, we do the whole shebang, everything that you need when you make an S corp election. But the thing about that too is, keep in mind that all your subscriptions, so your payroll subscription, your accounting software subscription, all of that is included in Collective's price. So even if you did it yourself, kind of piecemeal, you'd probably have, $120 or so of just subscriptions each monthly to a payroll company, bookkeeping. And then at the end of the year, you'd still have to find someone to file your S corp tax return. And that can be, a complicated return. A CPA or a tax attorney, they could charge, $1,500, $2,000 for a return like that. So really, Collective's price is about the same as what you'd pay anyway to handle it yourself. Ooh, here's a good question. What is the benefit of Collective now that tax season is over? Well, really, the big benefit of Collective now is kind of avoiding a calamity in next tax season. There's a lot of people, tons of people, that will come to me super stressed around tax time because, the books haven't been taken care of, just things haven't been buttoned up throughout the year. And a lot of times people are late on their tax returns, they've got to file an extension, and it's just not a good thing. So the benefit of Collective now that tax season is over is just keeping your finances, keeping your finances organized. That's one thing, but also to see if we can backdate your S corp election. Because if you already have an LLC in place, especially if you've had it in place since January, then we can backdate your S corp election to January 1st of this year. And depending on how much money you've made, I mean, that could potentially save you thousands of dollars in taxes, by backdating the S corp election. So that's probably the big benefit right there. Is yes, tax season is over, but there's still a lot of things that you can do to save on taxes, even in the off season. Can you break down what you get with Collective? I can just do this all myself. Well, so here's what I would say. Yes, you can technically do this all yourself, but you can also, theoretically, you can represent yourself in court, but should you? And the answer is usually no. If you ask any attorney whether or not you should represent yourself in court, if any of them worth their salt are probably going to say no. Now, with the tax profession, it's the same thing. It's when you become an S corp, It's a whole different ball game. From just an LLC or a sole proprietorship, there's a lot more compliance issues. There's a lot more just things you got to juggle and things that could affect your situation. So it's a good idea to have a professional in your corner. But essentially, kind of like I said earlier, you can think of Collective as kind of like an all-in-one solution for an S corp, or a business that needs to be an S corp. And the first thing we do, if you don't have your business set up, the first thing we do is set up an LLC for you and make an S corp election with the IRS. But if you've already got your LLC set up, like I said, we can backdate it. We can backdate the S corp election. But once we get that taken care of, we will also, especially if we're backdating your LLC, we will clean up your bookkeeping to that date as well, to January 1st. So we'll organize your expenses, add any expenses that need to be added in, all the way to January 1st. So that's kind of the first step, is to get you cleaned up. But then we will provide a payroll processor, because you will be on a paycheck. I'm sorry, I lost my train of thought there. You'll be on a paycheck with the new S corp election. So we'll handle your payroll, of course, with that. So we'll take care of the payroll. And then after we get the payroll taken care of, we'll also take over your bookkeeping as well. And with Collective, we do things on a monthly basis. So each month, essentially, we close at the books. So every month, we'll give you a profit and loss statement, a cash flow statement, and a balance sheet each month for the books. And then you also have someone on your team called a member relationship manager. And if you ever have a question, need to talk through your account, or get some guidance on what to do, then you can have a conversation with them at any time. And then, kind of as we run your books throughout the year, at the end of the year, we'll file your S corp tax return, because you have one of those now. Like when you do an S corp election, you have a business return that kind of comes into existence, and we'll take care of that for you as well. So when it comes to the S corp, we pretty much take care of the whole situation. All right. I believe we have some more questions coming in right now. How much more complicated is it to elect an S corp by myself without Collective? Well, kind of just what I went through, quite a bit more complicated. Because for one, you have to figure out how to actually make the S corp election. That's not, straightforward or apparent. And then you've got to deal with payroll. And that's really important, is when you have, when you're dealing with payroll, then you got to pay yourself a reasonable salary. There's a lot of compliance issues with the IRS that could get you in trouble if you don't do it right. And then you also have to find someone to file the business tax return. And that is a complicated return, like I mentioned earlier. So it's a lot more complicated when you have to handle all that stuff by yourself. Charlie, shh. I'm sorry, my dog does not like the cat in our yard. Charlie, hey, shh, come here. It's okay. Why an S corp? Oh, well, here's a good question. Can you claim your dog on taxes? Unfortunately not. Unfortunately, the IRS has not progressed to the level of enlightenment that they'll allow you to claim your dog on taxes. We're not there yet. But another question is, why an S corp? Why not any other type of business structure? Well, I mean, it just kind of depends. I mean, not everyone needs to be an S corp. Not everyone needs that particular tax structure. And so, for example, there are a few limitations when it comes to an S corp. And some of those are, For one, you can only have a certain amount of owners in your business, a certain amount of shareholders, and that's 100. You can only have up to 100 shareholders in your business. So that's one thing. And the next thing is, let's say that if you ever wanted to go public, or issue stock in your company, or something like that, then a C corp might be a better structure for you. So at the end of the day, the S corp might not be in your best interest. But thankfully, when it comes um, to S corps, and just kind of the classification on whether or not you need to be one, Collective will do that for you. If you set up a call with us, we'll go through your situation. We'll ask you some questions about your business, and we'll see if an S corp is even in your best interest. Is there anything that can't make an S corp election? Well, really, S corp elections are essentially um, for businesses, for-profit businesses. So something like a nonprofit, or some sort of structure like that, wouldn't there'd be no reason to make an S corp election, and I don't believe it's even possible. So really, the only entities that can make an S corp election are single member LLCs, partnerships, which is literally just another word for multiple people on an LLC, or two or more people on an LLC, and then corporations. Um, and all of those three entities are set up with your state, usually your state of residence, and you can make an S corp election on those three entities. Okay. Here's a good question. Why were taxes started in the first place? Well, um, they were started just to fund all the stuff that the government needs to do, and just kind of the fund, like, the public goods that the government provides. So, of course, like, as of now, the government handles the road maintenance, and just kind of interstate commerce. And really, a reason for taxes, especially for federal taxes, is for interstate commerce. Is the government kind of is involved, or is in charge of kind of regulating commerce between states. So that's another big reason why taxes were started. There needed to be a way to fund an organization to oversee everything like that. Here's another interesting question. What would happen if everyone in the country decided to not pay taxes? They can't take us all to jail. Well, it's true. I mean, they probably couldn't take us all to jail, but I think that's probably pretty unlikely. It's pretty unlikely that there'd be enough people that decided to not pay taxes for it to be a thing. So I would recommend that you pay your taxes. It's not fun if you don't pay your taxes, believe me. Also, too, it's pretty, unless you're committing just blatant fraud, or just kind of willful tax fraud, it's pretty unlikely to face any jail time by not paying your taxes. Now, you'll get a boatload of penalties and interest assessed against you, definitely. And they can levy your bank accounts. I mean, like, eventually, once they've given you enough legal notice, they can take money right out of your accounts. They can, put garnishments on your wages. So it's not a fun time when you don't pay your taxes. Like, eventually they'll find ways to get the money from you. And they can suspend your passport. Like, they can do a lot of things when you don't pay your taxes. What are some things that can get you disqualified from becoming an S corp? Well, disqualified. Well, you have to be an S corp. You have to be a permanent resident of the United States. Now, you don't necessarily have to be a citizen, but you have to be a permanent resident. And a permanent resident is just essentially a situation to where someone has spent a certain amount of time in the US and done some other things. Um, so you have to be one of those before you can be an S corp. Okay. Do you have to have employees to be an S corp? No, you don't have to have existing employees to be an S corp. So, but and when I was talking about employees, I meant you. Like you yourself will be an employee of your own business. So when you make an S corp election, you'll likely have an employee because you'll be one. But there, you don't have to have additional employees besides yourself to make an S corp election. It doesn't have anything to do with that. Okay, well, it's not really a question, but it's a statement. It says, "Hi there. I would love to hire a tax accountant and advisor." Well, go to our website. Check out our website, see if Collective might be a good fit for you, and you can schedule a call with one of our advisors right on the website. Okay. Can a partnership become an S corp? Yes, it can. So, a partnership, like I said earlier, it's literally just when two or more people are on an LLC. The IRS automatically considers you a partnership when that's the case. So, but partnerships can make an S corp election. Yeah, and then you'd have to, for one, especially if they were active, if both partners were active in the business, you'd likely need to pay both partners a salary. So just keep that in mind. But yeah, a partnership can be an S corp. What happens if you don't pay yourself the right salary? Well, there's a couple things. For one, this is what the IRS says about the salary. Because and this is what happens with an S corp. Before you become an S corp, the entirety of your net income, or well, it kind of depends, but usually a huge chunk of your net income is subject to the self-employment tax. So, for example, and that's a 15.3% tax rate. So let's assume that you were making $100,000 in your business. And before you become an S corp, how you come up with your self-employment tax is you take 15.3% and you'd multiply it by your $100,000 net income. All of your money is subject to it. But what happens with an S corp election is essentially you become a W-2 employee of your own business. And now you're still the owner, of course. Like, it's still your business. But for tax purposes, you literally become an employee as well. And since you're an employee, your business will pay you a wage. It'll pay you a salary, just like you'd receive if you work for someone else as a W-2 employee. But the cool thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary amount. So let's say, if you paid yourself, or I'm sorry, if your business made $100,000, but you paid yourself, $40,000 in W-2 salary, then only that 40K is subject to the self-employment tax. The other 60,000 is not. that's considered a distribution to yourself. Like that's the technical name for it. Um, some people use the term dividend to describe that chunk of money. But long story short, that chunk of money is no longer subject to the self-employment tax. So how you come up with your savings in that situation is you take 60 grand and you'd multiply it by 15.3%, which I believe is $9,180. Let me see. But yes, 9,180. And that's the money that you will not be paying in the self-employment tax. So that's how much you save. So once you reach a certain income level, it can be, pretty advantageous to go the S corp route. But the question was, what happens if you don't pay yourself the right salary? And it's a good question because another question that I get a lot, and it's pretty interesting, people will ask, well, if I only pay the self-employment tax on my salary, then why not just pay myself a super low salary? Then, why not just pay myself $1 in salary and the rest out in distributions, and I'll save a bunch of money in the self-employment tax? And my response is that you could get audited if you do that, unfortunately. Like if you, what the IRS says is that the salary has to be reasonable. And they don't really give a guideline as to what that means, like, what a reasonable salary even means. So usually it's a good idea to, have a tax professional come up with a salary amount for you, come up with some sort of method so you can have a little bit of protection um, from the government. And also, so if you pay yourself too low a salary, then you could get audited and they could, reclassify that, some of your money as wages and penalize you and whatnot. So that's one thing. If you don't pay yourself enough in salary, you get audited. But let's say that you pay yourself too much in salary. Let's say that you're being, way overly cautious or conservative, and you're paying yourself, too much than what you'd even need to. Then you're paying too much in the self-employment tax. So that would be the result of paying too much in salary is you'd pay more in taxes than what you need to pay. So the salary at the end of the day it's kind of a mix between strategy and compliance. You want to pay yourself a salary that will save you money, of course, but it can't be so low that it'll be deemed unreasonable by the IRS. So a lot of things to keep in mind when you have an S corp and you're paying yourself a salary, but that's where Collective comes in. If you come on board with us, we'll help you navigate all of that. Can I pay my children through an S corp? Well, that depends. Well, for one, yes. I mean, it's technically possible to pay your children. That's no problem. But if you do something like that, just be careful. Because the thing about that is there are some people that think that you can just pay your kids for the tax benefits, regardless if they're actually working in the business or not. But that's not the case. Your kids have to actually be working in the business before you're even allowed to pay them a salary. So be careful. And if you get audited, you could get penalized. The IRS wouldn't like it. So just keep that in mind. Can a C corp make an S corp election? Yes, absolutely. So really a C corp, all that means is when you hear the word C corp, it means that someone has formed a corporation with their state and then bam, that's a C corp. Like the IRS considers that a C corporation. But a C corp can make an S corp election. And now that corporation is taxed under the S corp tax rules. So yes, and really, there's no such thing really as an S corp by itself. Like an S corp isn't a business entity. An S corp is a tax election. So you've got to be an LLC or a corporation before you can even elect the S corp tax status. And a lot of people they have I guess like a misrepresentation about what an S corp actually is. A lot of people do. How old do your kids have to be to pay them? Well, as far as I'm aware, there's no official age or anything like that. I mean, it's just to pay someone as an employee, they have to actually be acting like an employee. So just keep that in mind, whether you're hiring anyone else or your children. And I believe I have time for one more question before I have to hop off here. If I have an S corp, can I give ownership in the company to my employees? Yes, as long as you have, but again, keep in mind that you can only have up to 100 owners in your business. You can only have up to 100 shareholders. So if you intend to, give ownership into more than 100 employees, then you can't do that with an S corp. And that is all the time that I have this week. I actually have to run and go speak to a prospective collective member. But please, like if you found this information useful, if you think an S corp might be um, a good idea for you, or if collective might be a good fit for you, then go to our website. Schedule a call, and we'll see the next best steps for your business.